Good morning, predicted trades. Thank you all for tuning in to the last session of the week. It's Friday, time to have some fun. Looks like, at least on my end, everyone can see and hear me. So let's start to dig in here. So first, let's have a little review on the last couple of days of epic moves, epic callouts, and epic predicted trades. And yes, last session of the month too. So we can always potentially see some, some shifty things going on as they try to park it to close the month. So, we had our FOMC on Wednesday after Microsoft and Google reported, Tuesday afternoon. We saw those both with good reactions and going up. The market went up, carried a rally into FOMC, quick dip back to VWAP, and then that big old ripper after FOMC. And yesterday, we couldn't have asked for any better price action. I mean, this was as clean as it gets, folks. We had that big run up, right? Teensy gap down, almost, well, it turned into a gap up, right? We run into squeeze tops in yesterday's highs. Or I'm sorry, the previous day's highs, Wednesdays. Perfect spot to reject, to load puts, to lock in calls that were swung. We have a dip back to 4,000. Also, at the time that we were down there, this daily Keltner, which now stepped up because we went up so much in the day, when we were hitting 4,000, that daily Keltner was right there for extra confluence. So we had a key level, 4,000. We had a daily Keltner that we were tapping. And I think if we look back, it was also right near Friday's high. So we got above Friday's high on FOMC. And then, pretty much where a lot of these candles close, it might be a little hard to see with the squeeze clouds. But right where those candles closed, around 4,000, that's where we were holding. So you can't get it much cleaner than that. It's pushing up too hard pre-market into squeeze tops right near yesterday's high. You short it back to a key level, and you got two or three things that lined up: key level, daily Keltner, the Friday's high, all perfect. Great hold, takes right off for a V-shaped recovery by 11 a.m., right? At that point, just hold on for the ride. We got through our zone. You can see we flagged right underneath this to build up momentum, took off through it, and then we chopped around that key level into close. Then we had Apple and Amazon earnings, both good reactions, carried market up to the next key zone. Look at how perfectly these zones work. We run into it, and we're just slowing down and consolidating at it. So, before we dig into what can be, let's take a quick look, because we do have some data coming out today at 8:30 in about 8 minutes. We've got inflation and the PCE and disposable income, consumer spending. And then we have some Chicago PMI and that University of Michigan coming out at 10 a.m. So plenty of data for them to digest. We'll see how the reaction goes. And then with a little more data coming out, the morning could go a little slow. We'll have to see. We're also getting to the end of a big earnings week. And really not much to cover there. Except, where's my calendar? Oh, we got through all of our, big names of earning, big tech, and pretty much every one of them, good reaction, right? We don't talk about Meta. So, or Roku. We don't talk about Roku anymore. If you look, we did have some energy reporting, Exxon, Chevron. I think I already saw a blip that Exxon is up on that after they reported. So good results and good reaction in energy and oil. It can maybe mean some rotation out of tech. Tech carried this market up to these levels, right? Might be time for tech to take a little break and for oil to get it over the goal line. And then we'll talk about what the goal line is, but just something to take note of, because since they reported, we're in a slight downtrend on ES. And real quick, I'm just going to look to show on YM, around the same time, we were getting up to a new high. Over that overnight earnings pop, right? So, a little rotation into YM could be expected today. And potential rotation out of NQ. You can see we got up to this zone, and now we're slipping a little bit. Everything's still gapping up, right? But just something to keep an eye on for today. So, where can we go? Nice thing is we have a 30-minute squeeze since we have gone sideways at this zone all night. And we can use this 30-minute squeeze as a good guide for if we break lower or higher from here. We have our these overnight lows, around 40.93, 40.95. That could be potential bounce levels as we slip into this squeeze at open. I also marked a 40.87. From yesterday's highs. It wasn't completely yesterday's high, but a number of candles interacted with that 40.87 as we made high of day and then started to come down. So, excuse me. I'll give you a quick idea, just moving it a little lower. You can see that interaction there. And now, you can also see my little 15 and 30-minute trail that I like to review sometimes. You can see all morning it's been support. We slipped it a little, but now we're getting back above. As long as we close above, it still is support because we have to close a 15-minute candle below it. So we do have a little support here at that 40.96. Should that break and we slip into this cloud, 30-minute cloud, this 40.87 that I marked from those candles, now that, was it 15-minute one? Yeah, the 15-minute trail, since we broke it, its support is right on top of that level. So, two key levels. Just call it 40.95, 40.96. If we can hold there, we can start to just move back up at open. If we slip, we could get down into this 30-minute squeeze, maybe even tag that number, and then get going again with the goal of getting back to this 4108, take out that high, and then truck higher. If we start to lose that 4087, right back into the zone, that was the target for yesterday, right? Got to it, through it, consolidated. So if we start to give out that 4087, probably right back to this, to see if this consolidation can hold and find buyers to send us back up. Through that, down to the next. You get the idea. Now to the upside. The big key level and zone, 4136.5. It's been a couple of months. Maybe some of you newer folks won't remember this, but it's been a key level all year, especially after we started selling back down. Let's go look at the daily. So that 4136 is this zone right here. You can see in the January, February sell-offs, and even the invasion, the Russian invasion of Ukraine, this is the zone we fell to. Might be a little hard to see, but this wick tapped that zone, made this low, and bounced. Then we held that zone, bounced, held that zone, bounced. Even when we got back to it again, tried to bounce, and then gave it out. Got back to it and rejected. So you can guess that is the very big key zone. Was support, became resistance, and now we're back at it. To truck higher, we have to take it out, but we are getting at second and almost third Keltner. So we could be getting a little extended. The last time we tested it, we were only at first Keltner, and we rejected. Now we're at second, and to get there is halfway to third Keltner. Come on. Good old toss freezing. So 4136.5, very key level and zone. That is the upside target. Can we get through it and tag some levels higher? Yes, but you can see last time we got there, we did get through, fell back through, back above, back through, back above, and then ultimately this last wick rejected it and sent it down. So we should expect, if we can get going to the upside for some more to get to this zone, that we could start to consolidate there. Let's drop back down. So you can see we're already starting to slip a little bit further, but we can right back up. So that 4095, 4087, let's see if we can hold and start to turn around to head back up to the top of the squeeze. Should those things give out, it will very clearly be saying we're finding its 30-minute squeeze down, and we're going to slip back to this zone. In Q. I marked some levels and got us ready for the same scenario in each for each index. So on NQ, we are pulling up on 13,000, big key psychological level. We have our a level here at 960. You can see that even with that Amazon earnings pop, stopped just shy of that level and then came back to base at the next, that 890. Now we're slipping back, got a key level here at 790, and you can see it's the wick of that earnings pop. So let's see if we drift into this 790 and start to find support. If we give that out, come on. Let's add a level here. Yeah, good enough. Right about that 12,700, 690, that high from Wednesday. It's what we tapped and pulled back for a second to gain energy yesterday. So if 790 gives out, we could slip down to that 690. And then 890. I mean, pretty funny how that lines up, but there you go. So let's see if 790 can hold us up, start to send us back through highs with a goal of getting above 13,000 and maybe even to that third Keltner. But, last day of the month, folks, we are at some key levels. We could just kind of bounce around those levels, closing in them, marking a great month. We have engulfed the previous month. I don't know if you guys are used to looking at monthlies, right? But I would look at each index on the monthly. This month, we engulfed last month. And with a little push to these levels, we can engulf the previous month. At least the bodies of the candles, right? That's why I've marked some of those levels, like that 890. It's kind of where April and May closed and opened. And you can see my next levels are further up just because a lot of this is wicks, right? And then we have our destinations. So, with a good push today to get above these levels and above 13,000, we can erase these, engulf these bodies, and set up for a decent, August. So definitely worth going and looking at the monthly on each of these names. It holds true for each of them. Oh. And like I have been showing on each of these key levels, if we can get up to and close near there, we have engulfed the last two monthly bodies. So that would, that's me explaining my upside targets for you a little bit. All right, on to the ready. I think we covered NQ enough. The ready, you can kind of see a little bit better how we've got yesterday went from one Keltner to the next. Ready held above the daily 8, kept on trucking, and we are at that second Keltner, and we are within reach of 1900. Just like we looked at some key levels on ES and NQ that are the upside targets, 1900 is the big upside target on Ready. When we gave that out this year, it spelled the second leg of selling. So that's kind of what we need to get to and turn into support. It's what we could reject. And we're not far from it. That's really like half an ATR to get there. So, with Ready, watch this 30-minute squeeze. If it starts to break down and give out some of these wicks around 65, it could spell more downside for the Ready and maybe the market if it's all slipping together. On YM, it may seem a little high in this 32,900, but that is kind of the same key level on YM. And if we are going to see YM rotation today, because of oil and everything. That would be the upside target. Do we get there today? Not completely sure. I don't want to edit. I just want to load it. Do we get there today? Not completely sure, but that is the upside target. Can we get there today? Yes, we can get there. We have enough in the ATR tank. Only up $6 on a 500-point ATR. And it'll take about 400 points to get there. YM did not, completely, I guess you could say it went full ATR, Keltner to Keltner kind of yesterday. But either way, upside targets that second Keltner for YM and trying to reach to that 900. We do have a 30-minute, and also nicely we have a 1 hour on YM. So should we start to give out that 30-minute at around that, we'll just call it 450. Yeah, 450, 440. If we start to give that out, we could slip down below that 400 to test that 1 hour squeeze. And maybe even get back to like that high from FOMC around 32,300. But if we can hold, start getting through the top of the squeeze, this high, target that next Keltner, and this is the big key level from above. Ooh, and if you'll notice, daily squeezes are all fired on all indices. Apple. What a move on Apple. From basically 150, 151, all the way up to 160, 164 at the high last night. Looking good. Stretched above that third Keltner, coming back to settle at it, and that 160. Let's see on Apple. If they can at least just keep it above this 160, at the worst, this daily 200. We blasted through it on that earnings pop. We might need to retest it cash session. So I'd at least be looking for, if they are going to do just profit taking, for it to settle at that daily 200. Below that, we're just completely engulfing that pop. So let's see if 160, 158 can hold Apple, send it back up through this. My next key zones above are way up here, and we're not getting there today. I mean, anything's possible, maybe, but that'd be a huge stretch and a huge push for Apple. So at the very least, we've got our daily 200. This third Keltner could be the range it gets stuck in today as they load up for next week. And yeah, that it wasn't CPI. It was PCE. Ooh, where are we? There we go. Yep, PCE and whatnot. Dragging us just a little, but not terribly. Still in our 30-minute squeezes. AMD. I mean, things have been getting pretty clean with these levels. Fell back to the daily 50, to this zone, at that, straddling that 89. Took off from there, hit the next level, and the next, settling in between. If we can get going through 91.91, it's up to the next zone. And that next Keltner up, second Keltner. We start to give out that 90.82 and slip into this 30-minute squeeze bottom. Could get back to 90 and then back to that zone if, market's rolling over. Amazon. Gone to the moon. Let's see. I'm sure I've got some stuff lingering around. Maybe I need to get in and update Amazon. It's been a while. Okay, well, we'll get there. With Amazon, anything's possible today. You do have a nice range set with this low around 35, this high around 39. If we start to give out 35, I'd be looking at that third Keltner as a potential point to settle, and that psychological 130. But as we've seen on a lot of earnings this week and last, we get good reactions. They tend to hang out and do profit taking, slow grinds back, and in some cases, like slow little grind and then a continuation. Like I think Microsoft was a good example of that if you want to go find one and see the difference. And I think actually BA might have been a good example too, so we'll see that in a second. But great reaction on Amazon. Congrats to those that swung that bad boy. Definitely get your piece at open. Yeah. So BA, here's an example at least of reported, good reaction, came back, and then popped it back up. BA still in the squeeze. And looking like it's gapping down. So it could be a little weak. I want to see it at least, hold up this trend line in that 150, daily 8, 156 for upside. Cat. Made a nice push in the last couple of days off of the daily 21, daily 8. Those will be crossing today. Always something to keep an eye on, but we got a nice uptrend going here. Let's see. Looks like we're gapping above the daily squeeze top. Well, let's see if it can magnet up to our key level. That's the target for the upside. If we start to give out that second Keltner, we could likely just slip back to 186. We could just chop around that second Keltner, which will probably land around 188, 189. Googly. Google popped with those earnings, but pretty much already come back to erase and having a little gap down. Yeah, just a few cents. I'd watch this high on Google for support. So anywhere around this 113.8 and maybe as low as this 113, kind of where we bounced yesterday. I'd be watching that 80-cent range for support. If it can hold, can send us back up through that overnight high to get to that first Keltner up. Ultimate goal. Got a 4.8 TR. Yeah, I mean, ultimately it'd be nice to, upside target is to get to this 120 in this daily squeeze top, but it looks like it's a little bit more than an ATR away. So if we can get a good support and bounce back up to take out, first target is to take out that overnight high, then get to that second Keltner and maybe 117, 118. GS. There you go, made it to that 330 overnight. So upside target, that 335, 337, where that third Keltner sits. Downside, if we start to give out, let's just say 327 and a half, we could come back to 325 to test that trend line. And some highs from here and here and here. Meta. Yeah, not touching it. It's down on earnings. There's other stuff to trade. Microsoft, just a continuing to boom, boom. Nice 30-minute squeeze. So at the very least, let's see if this 276, 275 can hold. It would continue the 30-minute trend and allow us to carry up through the overnight high. And that third Keltner is up at 286. We got that psychological 280 for upside targets. If we give out that support, likely coming back to that 270. Could be where they pin it if the market slips. Netflix. Not a ton of interest. Made a good move on the FOMC day yesterday. It wedged in this range. And we've got stacked squeezes, so this could just sit, but right here you got your low, your high. Should one of those break, should 223 break, back to 220 for a test. 218. If 228 can break, 229, and that 233 where that third Keltner sits. Viddy. Decent recovery yesterday, but did not push for new highs. Like Netflix, it's kind of a wedge, and now stack squeezes. So you've got your range. Play that range till it breaks. If upside can break, looking to get to 184. If the downside breaks at 178, back to 175. QQQ. Made it to our 311. Pretty simple. We can hold that trend line that we bounced at. This, actually, maybe don't think about that trend line because I feel like I went back and checked that and it was bogus. Okay, no. That's good. Yeah, around 310. Okay. I'll just leave it here for a sec. So let's see if 311, 310, maybe as low as 309 can hold us and send us back up through overnight high to get to zone above. There we got your what we should hopefully hold right here. Get through this level, we can get up to these. If we start to give out 311, we start to give out 310, we'll come back to test 307, where we bounced yesterday, where we kind of topped out, right? Roku, I'm not covering it. It's we're gonna leave this one alone. And I'm straight to SPX. SPX. Same thing yesterday. Perfect rejection of high from Wednesday, right down to that daily Keltner, which was a little lower. Right back up and through, hitting our key target to the upside. So, if you catch this low and it comes back to take out that high, always good to lock profit there as we could reject, but always good to leave a runner to get to the target, right? So for SPX today, everything still decent. Gap up. We're at about 19, 20 points right now. So that'll put that near 90 to 40, 92-ish. So let's see if we slide back to retest this key level at 62. If we can hold up at that daily Keltner around 4080, with a goal to get through 4100 to our next key level, 4118, 4120. And that third Keltner would be getting to 4150. If we give out support, likely, or give out that 4062, we'll likely come back to test that 4020, 4040 range. SPY. Made it to our key zone above. Came back to test, slipping a little. Let's see if that trend line, yeah, that trend line can work. So, let's see, now that we're back above this trend line, and we are above this daily Keltner now, when we open, if we can hold that daily Keltner in this trend line, 407 or 408, 407.20-ish, we can hold that. The goal would try to get back to this high, to this zone. Through that, the next one is, yeah, I'm about an ATR. So this would be the extreme upside target, where that third Keltner is just above, making a zone. But these things have to hold, and we have to get back and take these out. Should these things start to give out, likely coming back to that 403 high, right? If we're going to roll over. Tesla. Slipped down and held that 818 yesterday. Popped right back up. Hung out at that daily Keltner before taking off to try to get through 850. Didn't quite get there. The overnight pushed us over. And now we're kind of hanging out. So let's see if that 848 can hold. 850. I mean, we're below 850, so let's see if that can hold. Maybe at the extreme. What is this? 47, 45. So let's see if 45 to 48 can hold us. Should that start to give out, we could slip right back down to 35, 30, back down to the key level there. If the market's going to roll and everything's going to go down, and profit taking to close this month, a little bit back on this drive. If we engulf yesterday on some things, next target down would, in that scenario for Tesla, would be that 830. If we can hold in this zone, it'd be trying to get through a pre-market high, trying to get to that 865, and that third Keltner up at 875. UVXY. Stayed below this trend line for the most part. We did, on Tuesday hop above it for a second, but then got below it and rejected every day. So let's see if it can keep going to test this 10 even and this third Keltner, which might be jumping down to a little below 10, which would allow us to get more upside. But if it bases at this 10, 10.3 and turns back up to try to get to 11 in this trend line again, then we could see some market rolling. VIX. We got below that 22.5, kind of ramped to it end of day, even though things were still pushing. VIX started to move with it, but ultimately gave it out. So if we're going to see profit taking and start to roll, we'll probably see VIX come up to retest 22.5, or at least 22. Well, it's kind of at 22, and in a slight uptrend. So if we're going to see a little bit more profit taking at open, expecting VIX to come up and test 22.5. If it gets through that, we're going to see a little more profit taking, and I expect VIX to get up to get to that 23, 23.3, where the daily 8 has now caught up to. But if we can get continuation, this trend line maybe could hold us down on VIX. But if we're going to get continuation, we're going to need to take out that 21.8 and get down to this, is it second Keltner? Yep, second Keltner down around 25.25, 25.4 or 5, right? Down at this daily squeeze bottom. So if we're going to get a nice push today, we're going to get down to that daily squeeze bottom and this second Keltner. We're going to roll right back up to test these levels. Hopefully this was helpful, folks. It is a Friday. Let's size down. Let's have fun. And I'll see you guys in the room in just a few minutes so we can talk about our trade plans. Thanks for tuning in. I hope everyone has had a great week. We have crushed the last couple of days. I mean, we saw some trades yesterday that went 20x, 40x, crazy numbers. Love you all. Thanks for your support. Thanks for tuning in. We'll see you in the chat. Good luck today.